Let's begin from the beginning. What is international trade and finance? It's nothing but providing goods or services across the border. The process of financing such trade is international trade finance, and the same thing happening inside the border of the country is domestic or inland trade finance. Now, what are the roles or players associated with this export import business? First is, of course, the exporter or the seller of the goods. Next is the importers or the buyer of the goods. Next major player are the banks. The banks basically act as intermediaries between the exporter and the importer, sometimes just as agents and sometimes taking up much more responsibility than mere agents. We will talk about this later. Next are the transport companies. They are involved in the actual movement of the goods. If it is international movement, then it's generally the shipping companies and airlines. If it is inland movement, it's mainly by lorry, trucks or rail. Now, the journey made by the goods is a long one in international trade, and even in inland trade, during the journey from the seller to the buyer, many unforeseen circumstances may come. Now, insurance companies insure the goods so that the risk of financial loss due to damaged goods can be avoided. Now, there are many regulatory bodies in international trade, but mainly there are World Trade Organization or WTO and the International Chamber of Commerce or ICC. Now, WTO is basically an intergovernmental organization that regulates the trade between various countries, and ICC's main role is setting up the rules in international trade. Now, the rules are voluntary minded, but though they are voluntary, they are observed in almost all kinds of international trade. Now, when the importer is buying goods without actually seeing them, he may ask for various kind of certificates from the exporter. For example, if he is buying some kind of food item, then he may ask for a health certificate. If he is buying something whose chemical composition is important to him, then he may ask for a test report from an independent laboratory. So various kinds of certificates like these are there. One certificate worth mentioning is the certificate of origin, which is usually provided by the Chamber of Commerce, which certifies the country of origin of the goods. Now, in trade finance, there are basically three kinds of movements happening. What are they? We have the exporter and the importer. And the first kind of movement is basically the movement of the goods happening from the exporter to the importer. Next is the movement of the documents related to these goods. That is also happening from the exporter to the importer. And keep in mind that these documents are very important, because without these documents, the importer will not be able to release the goods in his own country. And last but not the least, the payment made by the importer to the exporter. Now, depending on the timing of these three documents, we basically have 5 different kinds of payment methods in international trade. Let's see what they are. Advance payment, open account or cash on delivery, collection of bills, letter of credit, and bank payment obligation, which is not much used in India. It is basically new payment tool. Now let's see each one by one. Now, advance payment, the name itself suggests what it is. We have the buyer and the seller, and the buyer is first making the payment to the seller, and only after the seller gets the payment, he is sending the goods to the buyer. Now here, the main parties involved are the buyer and the seller, or the importer and the exporter. No banks are getting involved directly, so there is no risk mitigation by banks, and the importer is at a very high risk because he is parting with the payment without getting the goods. Then why will anyone do this? This usually happens when the importer is new and small in business size compared to the exporter, and he has no other way but to trust the exporter. Next is the open account or cash on delivery. It's just the opposite of advance payment. We have the importer and the exporter, and the exporter is first sending the goods, and only after getting the goods the importer is sending the payment. Again, there is no risk mitigation by banks, and just the opposite, the exporter is at very high risk. And again, usually this happens when the exporter is new or small in business size compared to the importer. Next, now let's have an overview of collections and letter of credit. What are they? Now, in both the cases, the movement of the documents happen through the exporters and the importers' banks instead of the exporter directly sending it to the importer. In collections, the importer's bank hands over the document to the importer only after the importer pays immediately or promises to pay at a future date. Now you already know that these documents are very important for the importer because without the documents he cannot release the goods. So here in documentary collections, the exporter is at a much better control situation because he knows that if the importer does not pay immediately or he promises to pay at a future date, he will not be able to release the goods. So he is in a better control situation. But the importer's bank have no responsibility if no payment is made. Whereas in the letter of credit, the banks are not only handing over the document to the importer according to the LC terms, that is either paying immediately or promising to pay at a future date, the LC issuing bank gives irrevocable undertaking that if the importer fails to pay, the bank will pay the exporter provided the LC terms are followed. So here the exporter is getting a sort of payment guarantee. So it is a much robust and stronger payment method than documentary collections. Now this is just a overview, short overview of collections and letter of credit. We will be talking in detail about both of these in our later tutorials, so don't worry. Now, we have already told that ICC publishes various kind of trade finance rules. Now, you should know which rule is for which kind of payment method. Let's see. For LC, we have Uniform Customs and Practice of Documentary Credit version 600, also known as UCP or UCPDC 600. To support this, we have something called ISBP 745, International Standard Banking Practice. For collections, we have Uniform Rules for Collection 522 or URC 522. For the movement of the goods, we have International Commercial Terms, Incoterms 2010. A new version is coming up, Incoterms 2020. And there are some other publications like URR, URDG, etc. Now, we will talk in detail about some of these in later tutorials. Gradually, we will go in depth of trade finance. So anyone who is new in trade finance or is interested to know about this, you can think of subscribing to this channel. And before you leave, you can check out our other tutorials. And if you liked our video, please give a like and share. It will encourage us a lot. Thank you.